Well, major stock indexes have racked up more steep losses. On Friday, financial markets plunged, driven in part by inflation worries, the direction of the U.S. economy, and concerns about another short-term interest rate hike. The Dow lost nearly 3%. The S&P 500 was down more than 3.5%. The Nasdaq fell more than 4%. The big sell-off completed a tough month for the Nasdaq, bringing its losses to more than 13%. That's its biggest monthly decline since October of 2008. Michael George is here with the latest. Michael, what can you tell us?
Well, Michelle, good morning. Here's the thing. It's not all bad news. The job market remains strong. Wages are up and consumers are spending money. But there is no question the economy took a big hit this week.
On Wall Street, the stock market's miserable end to April topped off the worst 4 months of the year since the 1970s. Amazon was the headliner after its shares fell 14%, the tech giant's worst trading day since 2006. The company's profits dropped nearly $4 billion since the year began. The stock market's drop followed several unexpectedly disappointing economic indicators. The gross domestic product that measures goods and services fell 1.4%. Consumer prices measuring inflation rose 6.6% in March from the year before. At the pump alone, the national average for gas prices creeped back up to $4.16 a gallon in recent days.
High energy prices are playing a very large role in the amount of inflation we've seen. All of us have had to take a deep breath at the gas station in recent months.
UC Berkeley's Professor James Wilcox is watching what consumers do in the current inflationary economy.
Are consumers willing to spend money right now?
They are willing to spend, and in part because the job market is strong. We've had surprisingly strong wage growth in the first quarter.
That's the good news, because the economy stays strong when consumers spend. And relief from inflation may be on the way, says Gary Schlossberg, global strategist at Wells Fargo.
We do expect to see inflation peaking soon, if it hasn't already done so, but coming off the boil very slowly.
Central to what happens is the Federal Reserve Board, where James Wilcox served as an economist.
The Federal Reserve is going to repeatedly and by large amounts raise interest rates. And those higher interest rates tend to be tough on stock prices.
So expect more choppy sessions on the stock exchange, because interest rate hikes will make it harder for consumers to spend.
The Federal Reserve is set to meet on Tuesday and Wednesday, and they're expected to raise interest rates by 0.5 point. Jeff?
Okay, Michael, thank you.